Welcome back to the channel and welcome back to another weekly price action review. So trying to maintain consistency across the start of this year. Now I think that I've probably missed a couple, but by and large we are pretty consistent in ensuring that it gets done. Now at the end of the day, if I don't always manage to record it, I always try to maintain the fact that I have actually done all of the written narrative and that has been journaled and that has been stored. And as always, I make the point that the level of progress and development will always be seen through consistent journaling. So it's always important to ensure that on a daily basis that journaling is taking place, and also on a weekly basis. So with all of the blurb out of the way, we are going to commence, and we're going to start off with the top down on the weekly chart. And as is customary, I am going to begin by taking a slurp of coffee, and then we'll begin. Let's go. Right, so I've just noticed something there which is going to send my OCD mad, but there we go. Right, so heading into this week. Now, important before we head into this week to determine exactly what occurred from a high level standpoint from the previous week. And what we saw following last week's price action was the market traded down into this old low weekly liquidity pool with a relatively shallow purge, and then obviously the market rejected back into this weekly range. So that gave, as far as I'm concerned, I wanted to see a continuation of lower prices. However, because of this retracement, it gave the inclination that if there was a cracking correlation at the lows, that we could see a retracement on the weekly time frame up into the volume imbalance here and this bearish CB or bearish imbalance, whichever or however you want to phrase that. So that's what this was essentially highlighting to me. However, if the market formed some form of lower time frame cracking correlation at the highs into this week, then it's possible, or certainly if the market within this down close candle from the previous week, if there is an imbalance, a lower time frame imbalance inside of this candle, then that could in effect highlight that this CB weekly here could actually become a breakaway gap, and we could see a potentially, or as they phrase, a measuring gap, although I don't particularly subscribe to that narrative, but more so probably a breakaway gap. So again, it would be important to determine whether on a daily time frame an imbalance has formed inside of the previous weekly candle, and that potentially could determine whether, coupled with a high time frame cracking correlation, whether we see the market not trade up into the CB. That becomes a breakaway gap, and then we can see a continuation of lower prices. So ultimately, the market opened, it repriced higher, but it failed to trade inside of the volume imbalance and also the CB. So the market then retraced and closed back inside of this weekly range, so essentially creating a relative bullish to indecision candle, but certainly it formed an inside bar or an inside candle. So typically, if we see an inside candle, we could potentially see one, anywhere up to three, before we see the next explosive move. So that is quite possible heading into the following week. But let's jump down to the daily time frame to see in more detail what occurred during the week of price action. Okay, so now we've got more lipstick on the chart, and it kind of tells a story. Now, interestingly, coming into this week, this was probably it was a difficult week of price action, but also at the same time, price action kind of gave certain clues in terms of what it wanted to do or what was likely to do in terms of short impulse runs. And so we're going to touch into some of that during the next two time frames, because I think it's quite important, certainly from my own perspective as I journal my own performance each week, on what I spotted in price action, and potentially how anyone who watches this specific weekly price action review can take away some teachings from my perspective of what I thought price was actually going to do, or what price was looking to do. So as we drop down to the weekly and following on from that, as we drop down to the daily and following on from the weekly time frame commentary, some more coffee. So where I noted that I was anticipating a continuation initially of higher prices to the SIBI weekly, and largely that was supported by the fact that we had the high time frame SMT at the lows with NQ, and we also had the confirmation of the daily bullish order block. So all of which supporting potentially higher prices and that near-term narrative of seeing the market move higher, a more of a bullish sentiment, we should say. So the market repriced higher and purging ultimately. Let me just amend this. So the market repriced higher, purging the old high daily, so that would have been Monday's high. So we see the market reprice higher, purges this old high daily from the previous week, continues higher. Then we see a retracement before the market continues higher, and here we get this high time frame SMT with NQ supporting the idea of lower prices and retracing back into the daily dealing range. So at this point here, when this high is created, I mean, we have a high here, but we also have a high here. We have this dealing range here. Now, for the purposes of this, I'm just going to quickly draw up. So from this high down to this low, we have the dealing range, and it's interesting that you can see how the market, where it's rejected from to see higher prices, it's traded down to equilibrium and into a discount of that range before continuing higher. So something to note there. But anyway, we have this high time frame SMT setting the stage for lower prices for the market to retrace back into that range. The market then so the market did retrace back into the range, and then we see how the market reprices higher but fails to take out this previous daily high. And we will look at this in more detail on the H4 time frame. So here we note another high time frame cracking correlation. Again, we'll see it on the H4 time frame before the market reprices lower, which is this candle here. What is important to note as a key takeaway, we have this old high daily, we have the high time frame cracking correlation there, but we also note that the bodies of the candles failed to close above this key price level of the old high daily. Why is that important? Well, the fact that it's failed to close above it shows that there is no near-term intent for the market to reprice higher. In actual fact, it would indicate that the market is quite weak. Furthermore, what you will note from this daily price action here, so specifically we've got Monday starts here and we've got it through to Friday, but if we look at this entire range of price action, there is from this cracking correlation here to this cracking correlation here, there is no daily displacement. So that is indicating that there is no intent on seeing higher prices, or certainly a sustained move higher. And that, therein lies one of the challenges from this week's price action, was the lack of displacement on the daily time frame. And if anything, that probably should have tipped its hat to you to say we're probably going to be in a week-long consolidation, but that doesn't mean that there weren't opportunities to engage the market and ultimately profit from the market. So again, we note that the bodies of the candles did not close above that key price level, so that gave us an indication of weakness in the market. or certainly near-term weakness. The market rejected. The market then rejected repricing lower, which we saw here, but failed to trade down. So we have this candle here. We have the high time frame cracking correlation. Another one here. Market reprices lower. Then we come into Friday. The market continues to reprice lower, but fails to trade down into this high time frame key price level. Even failed to trade to it and through it, but ultimately it failed to trade to it. Full stop. And at the lows, forming a high time frame cracking correlation. Again, we'll see that on the H4 time frame. And then ultimately the market repriced higher back into the weekly range, where we get this really, what do they call it, a hammer candle maybe, where we have this rejection from the lows, and the market closes with a bullish close for Friday to end the week and trading back into the weekly range. So really the real takeaway from the daily time frame is look at the consolidation. For every move higher, we get the engulfing candle lower. For every move higher, which engulfed the previous candle, we're sort of just falling in a consolidation here. We have an inside candle, so therefore we kind of we knew on Friday that we're likely to take out one side of the range. We took out the lows, and the market rejects back into the range. So it'll be interesting to see what transpires now coming into this week ahead. It would certainly indicate that with the relative equal highs up here, that the market is now likely going to move higher and trade up into this SIBI weekly as a near-term high time frame objective. So let's drop down to the 4 hour and see what we've got here. So far more lipstick on this time frame, and this will just give us a more of a forensic look into what was going on the daily time frame. And at that note, I'll take a sip of coffee. Okay, and I'm back. Okay, so H4 time frame. Okay, so again, as detailed on the weekly and daily time frame commentary, the outlook for the week was to see potentially higher prices. We gave reasons, and the reasons why that may not occur would be for a high time frame cracking correlation supporting the idea of lower prices. So on Monday, we have the weekly open, which is right here. Let's get a pencil. We can always go out. So weekly open right here. Okay. So we see the market initially reprice lower, and we purge the old low H4. We see and form a high time frame SMT with NQ, setting the stage for higher prices. Now this SMT, we could argue, was the Asia range being purged, which is fine. You can interpret it that way. It's the same thing. Then ultimately we see the market displace higher and purges this old high daily before continuing higher to set the high of the day for Monday. And then we see this rejection, see this large rejection candle here, heading into Tuesday. So now we've had the confirmation here of the true week open. We see how the market consolidates before displacing lower, back below the true week open, but ultimately the market failed to purge that previous daily low here. So it looks relatively the same, but it failed to purge that previous daily low. Excuse me. Where we now note the high time frame cracking correlation at the lows with NQ. So ES formed the higher low, NQ formed the lower low. We then see how, although we get this rejection here, the market ultimately is just consolidating, as we can see there. Consolidating but trending higher in alignment with the high time frame cracking correlation, with the idea of seeing higher prices. Okay, so then we head into Wednesday, where the market begins to reprice higher, and ultimately following FOMC, which is this candle here, the market displaces higher and purges the old high daily, which is essentially Monday's high. Okay, where we then note this high time frame cracking correlation in the form of a high time frame SMT with NQ. And ultimately that set the stage for lower prices. So we see this candle, we see potentially the SMT, the market rejects back into that range. So the market then so we form the high time SMT at the highs, correct, and the market reprices lower. So we see this, and then ultimately market reprices lower. But it ultimately trades down, but fails to purge this old low here, which is essentially an old low on the H4 time frame. So the market fails to purge that here. We create this higher low scenario again, whilst NQ purged that same level. So we create this high time frame cracking correlation. Now it's important to note that this low here is not the lowest low. The lowest low for the day would have been this one here. So essentially it's a partial SMT. It's not the lowest low of that day. Market rejects aggressively. Okay, now if we had a SIBI in here, you can see how the body of the candle respected that SIBI. I haven't marked the SIBI up myself personally, but you can see that. But ultimately the market rejects aggressively, trades higher, and continues to reprice higher. So we're looking at this candle here, continues to reprice higher, purging this old high here, but fails to purge the previous daily high of Wednesday. And it's at this point here where we know another high time frame cracking correlation, this time with YM, to set the stage for lower prices. Now we see how the market aggressively rejects from this key price level, and this area here created the high probability trade of the week. That was the key trade of the week, in my opinion. There was another one, but that was the key one. And the reason being, as far as I'm concerned, is the fact that we're above the true week open. So that's 1. We've traded above and purged liquidity above the old high. 2. We have the high time frame cracking correlation. 3. And ultimately the market, based with lower time frame confluences, rejects aggressively. So that for me is the high probability move. So market reprices lower, and ultimately it reprices lower, and we see the market purge the previous daily low, and then it continues to purge the Wednesday low, but fails to purge the Monday low. This is where we see a large range cracking correlation at the lows with NQ. And again, any cracking correlation with NQ is a high probability cracking correlation. That does not mean that just because you see a cracking correlation with NQ execute doesn't mean that. I'm just saying that if you weight that up against a cracking correlation with YM, typically NQ has a higher weighting. And that's largely due to the fact that if you think about the S&P having 500 companies, you think about NASDAQ having 100 and then the Dow Jones 30. So you kind of get the idea in terms of why there is more weight placed behind a specific asset. Okay, so then what we note here is that high time frame cracking correlation. We get a low time frame confluence in here, and the market ultimately reprices higher. Back up into, so again, if we take our dealing range, there's the high right there. So we want to take this high down to this low where liquidity was purged here and here. And you can see that the market traded back up into a premium of the range to close the week. So that is pretty much the week action. Now, I'm just going to touch on the hourly time frame very quickly with just some key elements here. So again, let's just venture back to where I had mentioned that high probability move. So here initially we had this high time frame cracking correlation. We had this low time frame cracking correlation here before this one had formed. So that in itself was high probability. We're above the true week open. That in itself was high probability. I couldn't get a move on here. Okay. Then we trade down to here where potentially I'm looking at some form of reversal. I couldn't get a move on here. However, when we trade up here for all those confluences that I said, traded above the H4 liquidity pool, above the true week open. We have double SMT at the highs. That set the stage for lower prices, and then we had low time frame confluences in here, and that was a very good trade to take, targeting at least 2R and beyond. And then down here, obviously, we had this cracking correlation here, and the same principle applied. Purge previous daily low, purge another previous daily low. So we've taken a lot of sell side liquidity. High time frame cracking correlation here. We had low time frame confluences set in here to set the stage for higher prices, and then ultimately the market reprices higher back into that weekly and H4 dealing range. So that's my narrative for the week. Make sure as you go through, you take your time, you spot all of the maybe the little intricacies that you missed when you were sort of in the midst of battle during the week. Again, when you journal, it's the perfect opportunity to take a step back and actually look at price action. And a lot of the time you look at it and think, bloody hell, the market actually was very clear and concise in terms of what it was trying to do. Just at the time, I wasn't aware or wasn't willing to sort of take a step back and have a look at it. Make sure you document and note down all your key takeaways for the week, and specifically focus upon any of which may be a recurring theme or anything of that nature, because those are the elements that you're going to want to really hone in on and make them a key talking point in terms of your daily journaling for the week, so that you're focused on those things and you're improving on those things. But that is going to wrap this one up. Hopefully you've taken something useful away. I'm going to leave this one here, and as always, I will catch you guys next week on the next one.